Hey, just Jeff Clark here. I wanted to just say hi quick before we got rolling in this presentation. We're going to be going over the Aetna short-term care plan, their new one. They had recovery care. Now they have what's called recovery care choice. So we'll be kind of going through that. I've been spending most of my morning going through the outline and the sample policies and trying to get to those deep dive topics. So hopefully we've got them all covered. We'll go through this. We do have a place where you can enter questions. So I'll have a couple people on here with me monitoring those questions as they come in. So just go ahead and type them in. We'll try to address those as we move along. But again, just thank you for taking the time. Hopefully we can make this worth your while, and let's go ahead and tackle this plan. Before I do any webinar, first of all, Golden Care. Golden Care has always been your home for extended care solutions. We like to think that this is what we do. As far as a long-term care, short-term care, home health care, life and long-term care hybrids. This is our bread and butter. It's what we do. We have contracts and with all the products carriers in this arena. We've got all the tools. Just looking at some of the tools you have there, you got underwriting tools, you got the Insta Pivot, the underwriting concierge program. We've got bring in an expert, CSG for comparing Medicare products, Stratecision to compare short-term care with long-term care. All kinds of great tools that can be found at goldencareagent.com. Plus pre-recorded versions of this presentation, all the presentations we do. All of our training videos are all kept in a library there at Golden Care Agent. Just go under tools, resources, and look for webinars and pre-recorded. You guys will also all be getting a copy of this presentation, so don't worry about taking copious notes or thinking you're going to miss something. We will send a copy of this when we're done to everyone that's attended today. So if you need to leave early, don't stress out. We'll get a copy to you. And the last thing I usually kind of tell people is, look, when we're talking about short-term care, this last one here, our new underwriting corner with Renee. Renee Stutz is a new member, but not really new anymore. She's been around for a couple of years now, but she will help you with deciding whether or not someone could maybe be a long-term care candidate, short-term care candidate. If you want to sift through those underwriting guides and bounce things off it, we have a nice, we call it the underwriting corner. It's kind of a newer thing we're doing here. But besides that, I encourage all of our agents, if you have a case, give us a call first. That'd be your first move. We have tons of resources. We'll tell you where to get them. But if you have a case you're working on, whether it's a healthy couple that's in their 50s or a single lady with osteoporosis and a compression fracture, we're going to help you find that right plan. Okay, so let me go a little bit more about short-term care and we'll jump into Aetna. First of all, meet the team. My name is Jeff Clark. I've been around here for too long, close to 30 years now. We've got Manny and Morgan also as regional directors that have tons of product knowledge and know-how, and they know how to navigate all of Golden Care's tools. So there can be a real great resource for you, the three of us. But we also, of course, have the rest of our team. We've got, Lindsay and Renee and Corey Fountain and Lynn. And, if you need help with electronic applications or Golden Care Rewards or web-based stuff, we've got Corey to help you out and Lynn. We've got Renee helping with the underwriting, Lindsay to help us with quotes and marketing support. Plus, we've got a whole bunch more besides what you're seeing here, but this is our main marketing team. So feel free to lean on us anytime, anything you need. Okay, so let's briefly, every time I do a presentation lately, especially those on short-term care, Golden Care has really kind of shifted, kind of changed as the market has changed. We all know how long-term care went. And Golden Care has been doing long-term care for a long time. We've written close to $1 billion in long-term care premiums, short-term and long-term, but most of that long-term care back in the day. So having done this for as long as we have, that we've noticed the shift. A lot of the long-term care companies that were in this business are no longer in this business because, frankly, it was pretty hard on them claim-wise. A lot of the companies got beat up. They got out. They didn't price the long-term care plans right. Claims started to hurt them. Lapse ratios weren't projected correctly. Persistency wasn't correct. The long-term interest rates in this country took a dive. Consequently, what you saw is as many as maybe 50 companies offering long-term care 15 years ago. We're down to 3, and now we have a new one. CareScout just came in, but we have 4 long-term care. Meanwhile, over the short-term care arena, 5-10 years ago, we only had 2 short-term care plans. Now we have 6 and more coming. Aetna was one of the original ones, so this is the first redo of their plan they've done. But it's very clear when a company like Aetna is redoing their short-term care, they're recognizing what Golden Care has recognized, that the short-term care market is really filling that void where long-term care can't. Long-term care can't take on the risk. It's very expensive. It's hard to get underwritten with long-term care. It's very, very expensive to get a plan now. And so we really feel like the short-term care is really an asset to the extended care market. We're able to help so many more people that can't get a long-term care plan via health or age or just financial reasons. So long-term care has come along and really saved this industry. Because with long-term care, you have big benefits, lots of underwriting, catastrophic claims, long apps, big delays in getting underwritten. There's sometimes there's rate increases in some of the older plans. So then you have short-term care. It's capped at, two 1-year benefits or 2 years. So limited benefit. It's very easy on the carriers. They don't have the catastrophic claims. Now they can underwrite. They can throw that net wider. Okay, the apps are issued within 7 to 10 days. It keeps it very affordable and flexible and much easier to sell. Easier benefits. There's no partnership certification required. The 8-hour thing you need for short-term care. So we really do feel like short-term care is kind of where this industry is moving. At Golden Care now, half the business we're writing now is between long and short. Each year we start doing more and more of the short-term care, and frankly, I think that's where it's going. And as these companies you're about to see continue to um, bolster the benefits in short-term care, we're starting to see, pots of money there, 300,000 now with short-term care, which in the long-term care arena, we don't see people buying much more than 200 and 300,000 because it's too expensive. So here comes short-term care now with much more robust benefits than we had in the past. So these plans really pack a punch, and they do so without killing the people with underwriting, killing them with price. 90-day certifications, they can get help right away. It's an indemnity benefit. So there's so many good things with short-term care that literally half the people you should be talking to could either be long or short. I think it's important that you show them both. Okay, this is another wrap up on this. Difference between long-term care and short-term care. So a lot of people write 4,000 a month benefit in long-term care. They do a 3-year plan. So that means you go on claim, you're going to receive 48,000 over a 3-year period, knowing again that 80% of people aren't going to be on 2 years. Over here in the short-term care side, we'll say, look, we'll just give you the 48,000 times 3, pay it all, 144,000 over 1 year. Any unused amounts, it's all cash, go in your bank account. So all you're doing in short-term care is basically getting your benefit back quicker, recouping those premium dollars 3 times as fast. All right. So we do really think that short-term care deserves a seat at the big boys table with traditional long-term care and life and long-term care hybrids. It's always been kind of thought of as this other product, this thing that you kind of put it in the category of dental and vision or home health care, and certainly that's not the case. These benefits are packed with benefits. So, okay, Golden Care does have all the short-term care plans that are available today. Today, again, we're going over Recovery Care Choice, Aetna's new one. It's exciting that we're having another company that's seeing the need for short-term care as well and have amped this product up as much as they have. She's recognizing the importance of short-term care. Okay, so here's your state availability. If you'll notice the bright purple there, that's the one that's already improved in. And the next round of relist, this is where your recovery care, the original plan is the dark purple. The bright purple is the new one. Okay, so these are all the states that Aetna short-term care is in. The bright purple is where the new plan's been approved. And again, more are coming. So the launch coming up next round. Okay, so like I mentioned, on April 3rd, I guess this Friday, they're going to also release Iowa, Kentucky, Louisiana, Maryland, and Rhode Island. So they'll get to a total of 29. Eventually, they'll get to all 38 or 39 states. So we expect it to be coming. Existing recovery care product will be discontinued 60 days after the launch of the new one. So if you still wanted to sell it, although I'm not sure why you would, you could. For the 210 launch products, you have till April 19th, and on the 313 launch, you have till May 11th to write the old one. All right, well, let's get in here. Okay, so this comes a lot out of Aetna's brochure and some of the stuff that they actually presented when we were introduced to this product. So, Recovery Care Choice. We all know that Medicare is doing less and less. It's shifting that burden then onto the customer for a lot of this short-term recovery stuff, rehab centers, care that goes on at home following a hospital stay. So if you look at these things here, you've got a facility benefit that's going to pay you a daily nursing facility benefit for facilities care like intermediate care, nursing facility, assisted living facility. Okay, there's also optional home care in here, which we'll get to. Okay, these again, the Medicare stuff, and I want to bore you with that. We all know Medicare is doing less and less, right? So Medicare, in theory, is supposed to pay for the first 20 days of your rehab if you end up in a hospital for at least 3 days first and check into a facility within 30 days. I can tell you that this 20 days seems to be getting skinnier and skinnier. You don't always get 20 days of care because of the rehab center that's conducting the care. If they deem that you've leveled off and you're not getting better anymore, even if you're billed under Part A and you're supposed to get 20 days, we're finding that a lot of folks aren't getting the full 20 days anymore. It's becoming more and more important to have some type of short-term care for these recoveries, for these hospital stays, and the kind of stuff like anything, hip replacements, knee replacements, falls, accidents, injuries, surgeries. 2/3 of all bankruptcies in this country are a direct result of hospital stays. And the interesting thing about that is almost 70% of those people have traditional health insurance. So there's definitely a void out there, and this is very overlooked and underserved. Going back to a short-term care, for those of you in the short-term care, if you're not out suggesting or offering it to your clients, I think you'll find your clients will be surprisingly willing to listen to you because they are seeing this happen all around them, family members, etc. Okay, so Aetna's new plan. Now, Aetna in the past, their maximum on their daily amount was $400 a day. They've upped this to $700 a day. So $700 a day, you have a 90-day plan, a 180-day plan, 270 or 360. We mostly sell 360 of these short-term care things. You could find someone maybe in their early 80s. It's super expensive. Maybe you want to sell a 6-month plan. But typically we do a lot of 360. You can go up to as much as 700. The elimination period, 0, 20, or 100 day for your choices. It does include memory care. And the lifetime maximum equals 2 times that benefit amount. So in other words, if I were to take that $700 a day, if my math is right, it's going to be $21,000 a month. So that's a pretty nice payout on a monthly basis. At $21,000 a month, that's $240,000 a year for a 1-year payout for a nursing home. That should cover you in most places. So it's pretty robust. So the hospital indemnity, yeah, up to $700 a day. Excuse me, this is the hospital indemnity rider. So these are all the riders. So what Aetna has done here is they have a nursing home amount that I just showed you. This is their base benefit. It's basically a facility-only plan, okay, up to $700 a day. So the rest of them I'm going to be showing you now, these are all the riders that you can add. One of them is the daily hospital confinement. A lot of plans do this. They add a hospital indemnity benefit into their policy. So again, you can get up to $700 per day for a choice of 3 through 10 days, 3 through 10, or a 20-day period. They do that 3 through 10, of course, because they're assuming your first 3 days are going to be covered by Medicare. So those are two kind of unique options in the hospital indemnity reality. If you get admitted as observation, it only pays half. Other hospital indemnities out there are going to cover you for both observation or inpatient, but so keep that in mind with the hospital indemnity rider. The ambulance transportation. Now this helps pay for ambulance rides if you're currently in a facility getting care. Maybe you're in a nursing home, assisted living, you have a stroke, and now you end up having to go to the hospital. Or maybe you're at home receiving care, and you have a stroke, and now you have to go to the hospital. So this ambulance rider here is going to pay as long as you're on claim currently. It's not like other ambulance riders you see like in, sometimes in Medicare Advantage plans, or it's just simply any ambulance ride. This one, remember, is once you're on claim receiving care, because if you need to go to if you're at a nursing home receiving care and or at home care, in a home care scenario receiving care, and you end up at a hospital, this will pay $200, $400, or $600. Okay, home care. So naturally, anytime we're selling an extended care plan, and I say extended care with short-term care, yes, you have the facility benefit, but home care is where it's at. It's very important. So I would assume that most of you selling these plans, we're going to be adding the home care rider. Couple things to note with the home care rider with Aetna. They moved this up to $2,100 per week. Prior to this, it was $1,400 a week. So they've increased that also to $2,100 per week. So that works out to $8,400 a month. Okay. And you can pick again the 3-month plan, the 6-month, 39 or 52 weeks. They have a choice of a 0 or a 20-day elimination period. My advice to you, if you're selling short-term care, just always use the 0 when it comes to home. The load on it is so low that people don't want to wait those 20 days. It's important to get that coverage to them right away. So I would suggest using a 0. And the lifetime benefit, again, equals 2 times the maximum benefit. So the example for that home care, I'm sorry I don't have a slide for this, but if I'm getting, what we say 7,000, 21,000 a month for 12 months, it works out for 248,000, whatever it is. Well, that times two is your total maximum. So whatever your benefit is, your weekly amount, this example here, $2,100 a week is 8,400 a month times 12. That's right around 100,000. So your maximum then would be 100,000 times two. So you can reuse that 100,000 twice total. Ugh, clear as mud. All right. Here's some more riders. We're going to go ahead and go through these. So with your adult daycare, matter of fact, everyone that I'm looking here, mental health, inflation, you just add to the base benefit. Okay, so the adult daycare, this also requires you to be on claim. So once you're on claim receiving that care at home, if an adult child or someone that's taking care of that person at home needs to go to work and needs to bring you to an adult daycare facility, you can pick $50 to $100 to $150 a day, up to 30 visits a year. That's a rider that can be added. Okay. Home modification. This we usually see in the nursing home a lot, or in in traditional long-term care plans. It's a very popular benefit. They'll pay up to $2,500 lifetime for you to make basically some, upgrades to your house, handrails around the toilets, ramps coming into your house, just things like that. As long as you're currently receiving care and you're on claim, you have this rider can pay that as well. Inflation. It doesn't necessarily fit this group of six, but inflation is something that you can add to your policy. So naturally, I mentioned you have a $21,000 a month facility care, and you have an 8,400 a month home care if you max it out. So if you add the inflation, we can increase this at 3% or 5% compound. Okay. Um, Matter of fact, they have 3% simple and 3% compound. They have 5% simple and 5% compound. I know it's not on that slide right there, but they actually have 4 different inflation options. So that's kind of nice. One thing to note though, and this is a big one, with Aetna, the inflation does not inflate the home care amount. Okay. So when you're talking about the home care with Aetna, the $8,400, if you go, and I would suggest that you max it out because it can never grow. Okay. Now that 21,000, that's what the inflation ties to. So that 21,000 a month can grow, but the home care, so go ahead and max it out at that 2,100 a week or 8,400 a month, because the inflation is only going to affect the facility side of this. And going back to the home care too, I feel like I had to point this out. I don't think I brought it up. With Aetna's home care over here, they also have a rule that to receive that weekly benefit of $2,100 a month, you have to receive care at least 3 times a week for a minimum of 1 hour. So that's a little caveat with Aetna's home care. Same thing they had before, and again, you could look at this two ways, right? So what if I only get care 1 day a week? Well, guess what? Aetna's not paying you anything. What if I'm getting care twice a week? Same thing. But compared to other short-term care plans, let's just use Omniflex. If you had a $300 a day plan there, and you got 3 visits from a nurse during the week, you get $300 for each one of those visits, $900. Well, with Aetna, if you got 3 visits for that week, you get the entire 2,100. So as long as you have at least 3 visits, they'll pay you for all 7. So again, positive is if I'm only having 3 days a week, it's going to pay me a lot more. The big negative, in my opinion, is what if I'm only getting care once or twice a week? My Aetna plan is not going to pay me for home care. So again, you can look at that two ways, but it's very important to point out. I notice it's not pointed out, I think, in their brochure, but just so you guys are aware of that, under the home care, you have to have at least 3 days a week. Okay. Mental health. There's exclusions in this plan for any mental disorder or diseases. So Aetna has addressed that. They'll allow you to add this rider 25, 50, 75, or 100. And this is for those telehealth visits when it comes to a mental health issue. And this doesn't require for you to be on claim. It's one of those weird ones where they'll actually let you have it then without being on claim. Okay. Outpatient rehab. This is another one there where it doesn't necessarily require you to be on claim. And that's because, and I just went through the outline of coverage on this. In their facility benefit, they are going to pay for some therapy that maybe happens at the, as far as you're in the facility, they're going to cover speech, occupational, and physical therapy. Okay. This is again, as long as you've hit those triggers and you're receiving that care home. But if you have not hit these triggers, maybe you're at a hospital and need some help, and you get assigned to some outpatient rehab. Okay. This is where you can pick up some additional 50, 100 to $150 a day for some of that outpatient therapy that's not going to get covered for the plan. So if it's inpatient hospital, you end up home, you have a plan of care, you're receiving physical or speech therapy, you're going to be covered. But if you were deemed outpatient and now you need help, well, the Aetna plan's not prepared to pay you on their base thing. So you might want to add this outpatient rehab to make sure that gets covered in case you are on an outpatient basis in the hospital. Again, what Aetna's done here is they've tried to cover up every one of the little holes that some of the long-term care, short-term care plans have. So again, the outpatient and mental health are two areas that they're not very expensive. They don't come up a whole lot, but they're optional riders you can add. Pet boarding, same thing here. Well, excuse me. That one does require that you're on claim. So if you're on claim, at home care, receiving care, and suddenly again, I don't have a stroke, I end up in the hospital, it helps cover pet boarding costs. You can pick 50, 75, or $100 a day. And it has to be part of the plan of care as well. All right. Prescription drug benefit. I'm going to talk Omniflex a little bit. So there are 6 short-term care plans out there. And it's, again, Golden Care is kind of a bigger organization. Yes, we market all the plans that all of you people are used to seeing, but with our size and scope, having written $1 billion of extended care, when Mutual Omaha, when we partnered up with them in 2006, we helped design them a new long-term care plan. Took them from number 12 to number 1 in about 3 short years. We put a lot of the great benefits that we thought were important for a long-term care plan. They kind of let us help design that for them. Manhattan Life, similar. They leaned on Golden Care's expertise. Golden Care always wants to bring you plans that are cutting edge. In other words, whatever the short-term care out there, we're going to design a plan that's going to be the best. So we knew there was 2 short-term care plans out there, Aetna and GTL. We went out to go ahead and design something that was head and shoulders above those 2 because we wanted to be unique in the market. Well, maybe we became a little too unique, because now what's happened here is Aetna has now added a lot of things that were in this Omniflex we put together to kind of, I guess, shore up their plan, if you will, keep up with the Joneses, if you will. So this is only good for the market. The more we keep pushing benefits, the more other carriers kind of try to follow suit. So they have now added a prescription drug reimbursement benefit similar to the Omniflex. Now we have 2 short-term care plans that are going to give you up to $300 annual. One little caveat I discovered this morning on Aetna's. So with Omniflex, it doesn't matter. If you're taking a prescription drug, if it's generic, you get $10. If it's a brand name, you get $25. Okay, pretty standard. Same thing that works in the home health care plans that we all market. So with Aetna, you have to be on claim. So for you to get reimbursed for these prescriptions, they're going to need you to be on claim during that time. So if you're at home receiving care, at least for that year, you'll get the reimbursement. So it's a little different in how they're doing it. They did add one, so I applaud them for that. Bed reservation. This, again, you have to be on claim. Okay. So if you're at a facility receiving your care and you suddenly end up, in a hospital, okay, sometimes these nursing homes, these assisted livings, they have to occupy it full. So if you're there for 2 or 3 weeks, they're going to sell your bed. And so what bed reservation does is it pays to hold that bed for up to 21 days, I believe it is. And then this Medicare Part B excess charge, this is very unique. It's a rider you can add, because we know with Medicare, sometimes some states will allow you to bill up to 10% above of what Medicare is allowed to bill. So this excess charge usually ends up with the customer on Medicare. Some Medicare supplements have a rider to cover this. But with Aetna here, they're adding this Part B excess charge. More or less, it says pay as a difference between Medicare allowed amount and the actual amount charged by your provider. That's capped, of course, at the 10%, et cetera, but it's a nice little rider they put in there. Okay. I just went through a lot of benefits there, a lot of riders, and I apologize if they're a little muddier in there and going through. We will give you a copy of this, and if you want to go deeper dive on some of that stuff, because it is a little different than the short-term cares we're seeing. They've added a lot of riders. Some of them require you to be on claim, and some don't require you to be on claim. So if you really want to just talk a little deeper on this, we can certainly answer questions afterwards, but certainly give us a call here. And we're going to be doing another Aetna recovery care here. Remember, this plan's been out for a little over a month now, and Golden Care has been feverishly ripping through everything we can get on it, sample policies, outlines of coverage. We try to bring these to you as soon as we can. Okay, so if we also uncover something else that hasn't been today, we'll be doing this webinar again, and hopefully we'll have even a solider hold on this thing. But some basics here. Issue ages is 40 to 89. Benefits are paid directly to the customer. Remember, it's an indemnity plan. So when they have $700 a day and the nursing home charges them $360, they're going to get a check for $700. Actually, they'll wait till the end of the month and give them the whole monthly check. But that's paid directly to the insured. Benefits are paid in addition to any other health care like your Medicare. Benefits are non-taxable. This policy is guaranteed renewable as long as you pay your premiums. Okay. Now, projected cost of long-term care. We always see these in these type of presentations, and yes, it's getting expensive. Semi-private's $136, shared room $119, assisted living $62,000. With this $700 a day, we can get there. We can actually cover up to a year of this. So even in the long-term care world, we don't see a lot of people writing, and in fact, the companies cap you at like $500 a day usually. So we don't see a lot of policies that are, paying out more than, maybe $10,000, $12,000 a month. So to have access to $21,000 a month here is really strong. It can cover some of these things, at least in the short-term care or the short term. Now, the other knock that people give with short-term, it is a 1-year benefit. So for those of you that are aware of this, what we're seeing a lot of agents do, because their client can't pass underwriting for long-term care, maybe they can't afford it, what we're seeing is people are doubling up. They're buying 2 short-term care plans. They'll buy one with Aetna, they'll buy one with Manhattan Life. So that's why you get kind of like a 2-year benefit instead of 1. Sure, you claim them both at the same time, get all that money out, but there's no reason why you can't put the other $100,000 you were paid, because it's paid directly to you in cash, put it in your bank account. So if you're worried about getting even more benefits sometimes, you can get there in short-term care. You just buy 2 policies. Okay. This is kind of interesting here. With Aetna Recovery Care Choice, $700 a day, that could cover you for 663 days for a nursing home, or over 4 years for assisted living. They're factoring in there the times 2 maximum benefit. Okay, so pots of money. This did come up later. I apologize. I was trying to do the math on you earlier. So at 360 days, 1 year of benefit was whatever I figured out it was 258,000. Well, that times 2, excuse me, 200. Yeah. Well, that times 2, 250,000 times 2 is 504,000. So what they're doing there is 720 days. Now you can't have 360. You can't have 700 consecutive days. Once you have a 360-day benefit, that's done. The policy's done. You have to recover, not be on claim or claim free for 6 months. Then the policy restores again. So when you're seeing this 504,000, that's actually the maximum you can get. Okay, so it's about 252,000 per year or per claim, but you can claim up to 2 times. And one of the strengths of Aetna, it's not really in here, but when we talk about short-term care, we talk about the ability to, that the policy has restoration of benefits in it. This is more of a short-term care in general. It's why I'm kind of a big fan of the short-term care plans. This is kind of speaking generally now. But with short-term care, as opposed to long-term care, it no longer has the restoration of benefits. Restoration of benefits can happen. Because remember, with short-term care, we're doing 0-day elimination periods. It's going to be for like a hip replacement, a knee replacement. People slip on the ice. This plan can start paying them first day. Maybe they only need care for 2 or 3 weeks and they're better. Maybe it's a knee replacement, it's 2 months and they're better. We assume they're going to get better. 6 months later, these benefits restore. So with this particular example here, at a fully loaded plan at $700 a day, at 360 days, that pays $252,000 out. Okay. So what if I use 30,000 of that and I recover? Well, then the next time you go on claim, you have access to 252,000. You've got 220,000 sitting on reserve there. Because unlike Cigna, Bankers Fidelity, GTL, and Wellaby, Omniflex and Aetna are stronger here. They allow you multiple restorations, as many as you need until you exhaust it. That's important here. Again, this is one of Aetna's strengths. So I could have a hip replacement done, get better. A year later, have the other hip done. Have a claim for a month, get better. 2 years later, get a knee done. Have a claim. 3 years later, have a stroke. Have a claim for 6 months. And then 5 years later, develop Alzheimer's, end up in the facility. Now, with the other carriers I mentioned earlier, if you went ahead and claimed a 2-week claim because you broke your hip, it's probably not advisable to burn up your whole 360-day pot if a nurse came out 4 times. You don't have to make that choice with Aetna's Recovery Care Choice. You have multiple restorations. They will happen. Traditional long-term care, they don't even sell restoration benefits anymore because it was so rare that someone, first of all, hit their triggers. Remember, they have to have a 2 out of 6 ADL deficiency for a period of 90 days or longer. In short-term care, there is no 90-day certification. So if I break my hip and I need help, I get care tomorrow. In long-term care, if I break my hip, it's too bad. You're going to be better within 30, 60 days. You're not going to need care for 90 days or longer. So restoration in the long-term care world really became a non-factor. Carriers just stopped selling it. Restoration does exist in short-term care, and it's so important. And then it becomes even more important when companies allow you to have multiple bites at the apple, and Aetna is one of them. I hope I didn't beat this slide to death how much. It's such an important thing to understand. You get 2 buckets of money. So these are two $250,000 pots. Down here, or is it 218 total? So that's 109,000 each. Okay. So really, you add it up. This is a $718,000 policy. That's if you reuse it. But even on its surface, its base benefit is $350,000 worth of coverage. I can tell you that 75% of the long-term care that Golden Care sells, 85% of the policies that we sell don't exceed $300,000 in benefit. What we're doing now, because it's become so expensive, is most of our long-term care agents are writing like 200,000, 300,000 pots of money. So they're essentially selling short-term care already. They're just doing it on a long-term care product. Okay. What else we got here? There's your lifetime max. If you add them both up. Yep. Okay. Here's your health questions. I don't think I want to read these to you and bore you. I got to move this thing on my screen here. It's in my way. Where to put that? Over here. Okay, good. So again, I'm not going to bore you with this. Short-term care is easier to get. Policies are issued within 7 to 10 days. Read through these questions carefully. I will tell you this: when you're filling out a short-term care application, this goes for all of our companies and carriers in short-term. Literally ask those questions, answer those questions exactly how they are worded. Don't add extra things. Don't try to overthink them. They're yes, no's. Put those down. They'll tell you if you can submit this or you can't. Aetna pretty much issues these things very quickly. As soon as you can answer yes to all these things or no to all the health questions, they're going to issue policy really quickly. If they need to, they can order an RX. They'll check in some things and make sure your answers are matching with your RX, etc. But essentially, just go through these, answer them exactly as they're written. There's only 7 questions. What else we got here? Might be coming to the end here. How far are we through here? Give me a sec. Yep. Okay. All right. And again, on the underwriting, folks, the biggest thing I would tell you to do, especially if you're newer to it, lean on Golden Care here. We have the Instant Pivot tool that essentially takes all of the short-term care and long-term care underwriting guides, all 80 pages of all these carriers. They're all put into one spreadsheet. Every ailment known to man that appears in any of these underwriting guides is in there. So when I put in, for example, I don't know, Parkinson's, or if I put in diabetes with stint, or I had a stroke 4 years, whatever ailment I put in there and multiple ailments, it's immediately going to go through all those underwriting guides of every carrier out there, every product out there. It's going to tell you which products are available and the state you give it and the ages you give it. It'll tell you based on this health condition, I can immediately know what plans work or don't. Let us teach you how to use that tool if you're not already. Otherwise, lean on us. Between myself, Renee, and our underwriting concierge program, we'll help navigate that for you folks. Okay. All right. Mobile rate tool. I do not use this. I've been licensed and sold Aetna for 25 years, but I don't use the mobile rate tool on there, so I probably should. So I really can't speak to that a whole lot. If you want to get involved with that, I'm sure we have tutorials on that. We can get you information on that. It's nice that you can actually Downloading the app, Apple or Android, you can see you can get rates for all these different products that Aetna has. As you know, Aetna's got lots of products out there. Today we're talking about their shirt, but they do have, their Med Sup, their Final Expense, their Dental and Vision, their Cancer, their Home Care Plus. So the heart attack, cancer, and stroke. So all those plans are available in that mobile app. Okay, so I want to do this. Now that we're kind of done going through the Aetna, first of all, let me see how many questions we have here. I want to see if I can find any. I don't know, Lynn, if you're on or anyone else there, Manny and Morgan, do we have any questions that have come up? Or have I just made this? Let's see. Oh, yeah, there's 8 of them. Wow, okay. Let's do this before I move to this next slide then. Okay. Let's see. I don't know if they came. Yep, I'll start this one. You're on mute. Does it have inflation? Yes, it does. But remember, the inflation only inflates the facility, not the home care. Yes, Eric, we will have slides that we'll send you after this presentation is over. There's another one here about I don't understand how the lifetime maximum equals twice the number. I hope that slide, because that question came in a little afterwards, it's just 2 times your maximum amount. So again, if I have $700 a day, that's $21,000 a month, or I guess I said 84. That works out to $252,000 of benefit. That's the 1-year plan you have. If you exhaust that, if you use all that up, after 1 year, after 6 months, you have access to another $252,000. That's how you're getting to that lifetime maximum. It's 2 times your benefit amount. So if you bought $252,000 worth of coverage in facility and you bought $109,000 worth of coverage in the home care, just multiply both those times 2. That's your lifetime maximum. Had another question here. I think I said 2 out of 6 ADLs. Someone may have heard 5 out of 6 ADLs. So short-term care, and I'll say this again. How do you claim on a short-term care plan? Well, you have to have a 2 out of 6 ADL deficiency, unable to perform those activities of daily living. And with the big thing here, and again, I'm just going to say it again, huge. With short-term care, this 2 out of 6 ADL deficiency does not have to be, your doctor doesn't sign off that you're going to need care for 90 days or longer. It's just a big, big benefit there, okay? So it's 2 out of 6 or cognitively impaired. That's how you trigger. Similar to long-term care, except for that one point, is a condition doesn't have to be 90 days or longer. So that's really an important one. There we go. Okay, what else we got here? Yeah, if someone purchased a policy with a mental health rider, is there a time period before they can utilize the benefit? Yes. 6 months existing conditions clause. I just read this, matter of fact. So for anything you go on claim for, they'll put the policy in force, and they will do some underwriting in the rear here. If you try to claim on something that, with the first 6 months, there is an exclusion for that 6 months. So to answer this mental one, yes. I think if you added that mental health rider and tried to claim within the first 6 months, I don't think that would work. Okay, but it doesn't mean if they have mental health issues already or they're seeing after 6 months, they should be fine. Okay, I'm gonna read this question. How do we suggest people handle submitting claims for short-term care policies when they're unlikely compromised physically or cognitively when they need plans? Boy, that's a question that more or less, isn't that true of even long-term care? I mean, I'm a person who's written 700 and some long-term care policies, and I get claims about every month. And yes, I mean, the people that actually need the care, they're incapacitated. Half of these people couldn't possibly call someone, figure it out. So with short-term care, you're probably gonna have someone advocate for you. It's unlike long-term care, where long-term care has what's called care coordination services. So you go and claim in long-term care, they have someone that's assigned to your case. You don't have to use them, of course, but they're going to kind of help you navigate a plan of care, call local home care agencies, assisted living facilities, whatever the plan of care calls for. They'll organize it to try to help you bill it. So that service doesn't really exist in the short-term care arena. And so, yes, you better hope that there's someone that's going to be helping this. But I assume if they're at home, someone's still taking care of them, or if they're in a facility, if they're incapacitated, that money gets paid directly to them. So I'm hoping someone's going to be able to facilitate on their behalf. It's a great question, but how do I suggest it? I always suggest when I'm sitting down with my clients, I always made this is how I sold. I always made this a family thing. I never wanted to sell just mom and dad. I'd usually ask my husband and wife, or even a single, tell me about your family. Do you have a kid that's close by? Do you have a kid that's more responsible? If the chips are down, is there someone that you're counting on? Someone that, and I always wanted to flush that person out. Is that someone that I should be talking to, or we should be involving in this decision, or is it someone that we should send quotes to as well? I found that involving the family, I used to be scared of it. When I started out selling, I thought, I'd make a nice sale. I talked this husband and wife to buying a good long-term care policy. And then the adult child who works on the forklift at the local plant would call me and say, yeah, my parents don't need this. I'm going to take care of them. Right. So, you know, I, I always felt going into this is a family issue. What we're talking about, extended care, is such an emotional sale. It's about aging with dignity. It's about designing a plan for when this stuff happens. By the way, 90% of married couples are going to need it. I never told my clients, if you need care, I say, when you need care, what's your plan? Is your daughter moving in here? Are you moving in with your daughter? Are you planning, where do your kids live? Or how's that going to work? So I always went right down to that. I want to involve the family members. So the long answer on that is yes, there has to be someone probably advocating your behalf. Aetna's not going to assign anyone like they would for long-term care. All right. What else we got here? Okay, there we go. The restoration benefits of 5 and 6. Okay, I got you there, Ron. Thanks for that clarification. Okay, I'm not seeing any more in here unless Manny or Morgan are seeing ones that I'm not. Um,
I think
okay.
we've answered most.
Okay. So now just at the end of this, I feel like now that you've went through and seen this plan, um, we do offer all the plans. So if you'll notice here, this is recovery care, the old one. So if you notice before here, there's a lot of, here's Omniflex on your left, right? All these things it does cover. And then you had a couple shortcomings with essential care, recovery cash, and recovery care, like not inflating things, or no prescription drug reimbursement, things like that. And so I think if I do this one correctly, next slide, there's an animation here, right? All right. There we go. It is fading. There we go. So there's your rates. But then I think we ran one with a new plan as well. Yep. So if you notice here, over here, Recovery Choice cleaned up a lot of the areas, the shortcomings that they had before. So they did add a lot of nice benefits. They still have a couple of them with not inflating the home care and, subtleties like that. But they did come a long way. And so just to give you an idea of the prices now, so here's how they shake out now. Oh, I guess not. You have to look at the bottom of this one. This is again for a $200 a day benefit for home care and facility. Here's Manhattan's Omniflex, Essential Care, Recovery Cash, Recovery Care, the old one, and the new one. So if you're wondering how much more expensive this one is, if you don't add any of the riders in there they've added, it's really pretty much the same price as the other one. I mean, $7 difference there. What, 6-7% difference. But they have the ability then to add these riders, and they did, of course, add a couple more things. So, overall prices are what they are. If you'll notice, the Omniflex there is clearly lower. That has to do with the ramp up. But anyway, just telling you have a snapshot of how it compares. I can tell you that let me wrap up here. I'll tell you this, and plus, oh yeah, one other thing. This is another one of our tools that's on our website. If you ever want to look at the Manhattan Life, Medico, GTL, you can run all 6 of these plans with all these little benefit specs comparisons. You can do this for long-term care or short-term care. It's called StratDecision. It's on our website. If you really want to get to know this market better, we'll help you print one of these out. You can run quotes on this. It'll show you the prices. This is a 61-year-old, but what a great way to learn all the products out there, and a great tool. Okay. So with that, we already answered the questions, everything else. I want to make sure you guys are aware of how to get a hold of us. 800-842-7799. Again, we are in this market. We do work with all the plans. We're happy that Aetna has bolstered this. It's a great company. That name resonates with folks. They put a lot of benefit into their short-term care. The fact that now we can buy $360,000 of a base benefit. Remember, Omniflex, you can only go up to $244,000. So they've definitely upped the ante. Well, we couldn't get it all, obviously. I mean, Aetna did a lot of things. I'd like to see them, inflate that home care part, but So that's how they designed it. And so, there's optional riders you can add in, or some things that really, are nice little things to have. The pet boarding I thought was interesting. The ambulance, or these are things that do come up. And so I like that they're an a la carte version. So with that, that's all I really had for you folks. We're going to send a copy of this to you. We'll be doing another one, another deep dive on Aetna, with a little more. We'll do it a little differently. But we wanted to get this done just because the plan is out. It's being marketed. It's going to be released in more states. So I want to thank you guys for coming on board today. I hope this was helpful. So I'll leave this 800 number on there a little bit. I don't see any more questions. So we'll go ahead and leave this 800 number up there again, 800-842-7799, or visit us at goldencareagent.com. Now, having seen this, I'm hoping someone out there is going to say, I have a client this is going to be perfect for. Maybe I haven't done much with it yet. Please give us a call. Talk to Manny, Morgan, myself, or any of our support staff here. We'll help you walk through these plans. We'll decide which one's better for you. We'll help put together quotes, show you how to get quotes, materials, brochures. We'll tell you how to do the e-app. Whatever you have out there, I promise you your clients are waiting to hear from you. Let Golden Care help you do more of this business. Okay? All right. Anyways, thanks a lot, everyone. 800-842-7799 if you need us. And have a great day and have a great Easter, everyone, okay? God bless.
Check out our website, goldencareagent.com, or give us a call at 800-842-7799.